Hey guys, welcome back to another episode of Market Mastery. So, the title of this video is Bitcoin Bulls Have Returned, but for how long? And we are going to cover off what's actually putting this local bottom here. Is it a longer term bottom? What to look out for entry and exit points on BTC now that we're getting to move back into an uptrend again, breaking through some resistance after failing to do so for almost 3 months straight. Things have definitely turned up. We're going to be looking at the overall economy and the stock markets as well. So first up, I think I want to cover off the chart that I'm using the most at the moment and been posting about in Facebook groups and Discord community, just for my overall sort of assessment of where we are in the current move and is this a bottom or not, right? So the first thing that I was looking for was I was waiting for a break and reclaim of 29k. So a move below here and then reclaim of this would have definitely been an entry for me. I think that was the best setup that we could have hoped for as bullish traders are looking for a reversal after taking out the lows here. That would have been the best entry for me, but we didn't get that, or we haven't had it yet. It still possibly could come, but so far we have a local bottom that's been put in with the wick reaching 33k, right? Pretty nice final capitulation. And then Michael Saylor obviously started buying like crazy. And he actually managed to put in the bottom for us here. As soon as he finished his buys, we actually had a really nasty down red day of about 5%, which coincided with the stock market dropping as well that day. And then we sort of saved it on top of what is a monthly order block. So I'm just going to go quickly show you guys that. So this order block that was here held as support, which obviously we really needed it to. Otherwise, there's not really any support until 20k on the monthly time frame from there, right? So that actually held quite nicely, and we got this daily pin bar off that. And from there, we were looking for that Morningstar reversal off the key monthly level. And boy, did we get a really strong daily push after that, and a really nice short squeeze. And we've just been really strong momentum ever since, right? Obviously, we had the weekend, which was a bit slow and running pretty hard, right? So we didn't get that break below 29k. So what we had been looking for, apart from that, for other conditions to get entries, was this big breakout of the downtrend. So the downtrend, which started 8th of November, right? Pretty much 3 months that's been in a downtrend for. Basically, we broke out of that. And that was a really strong trigger for me for a continuation play, right? Because basically, this is a falling wedge, right? It's not as pretty as you usually get. Usually you get them a little bit more angular like this, but at the end of the day, this is a falling wedge or a downward channel. But the real key thing to look for with things like this is not like the shape, but it's the outside trend line that gets broken. Now, usually with these plays, what happens is you get the outside trend line, it breaks, you get a really strong move up from that, and then you have a pullback. And a lot of times you get sort of like this inverse head and shoulders type shape, right? Which looks like that. So expecting that, we would probably have a really nice down move to retest this really key support resistance level, which is basically $40,000, right? 40.5. So that would be another really nice entry for me if we do come back and we get a nice support resistance flip of that level. What I'd love to see here was, this sort of action, like we get a bull flag here and then break that to the upside and then push again. And my target for that would be 50k, right? So that would be a really nice trade through there, and something definitely could expect to happen. I think that would be a really nice entry because this is such a key level through here, right? It was obviously resistance here, sort of broke through it, whatever here, came back, held as support. So this was a really strong move up to the all-time high, came back, bounced off it here, and then broke through it, right? So we come back and then reclaim that level would be a really strong sign. And it would be a great trade because, you get a really definitive level that if, you start opening and closing below that level, right? So if price comes back down and we sort of go like this, and that follows and rolls over and starts trading below this level, right? We get a bearish retest, something like that, you know that's your exit to get out of the market and close that trade off. So you got a really definitive level in there to trade off if we do come back to that to buy in, right? I also had some buys as soon as we broke through this level and as soon as we broke through this level as well. I was, a little bit hesitant because of the market recently that we were going to do something like this and then end up, coming straight back down and leaving a big wick, something like this one by the end of the daily close. But we had a really strong, nice daily close, right? So we've broken through this level quite clearly. Now, the best thing that we could hope for is a pullback, which would, I think, be healthy because this move is starting to get a bit overextended. A pullback, have a little bit of a reset on the RSI as well, have a swing low on stochastics, our momentum indicators, and then we can rally again from there. So that would be the main thing that I'm hoping to get at the moment. Pull back to 40K, can enter some more in there and get some nice leverage long positions off that, looking for a move up to about 50.1, right? The other main thing as well, I've been waiting for, obviously, we reclaimed 40K, right, which was the other condition that we were looking for. And also this red trend line, right, that has been support trend since 2020, right? So basically over 2 years, right, or a year and a half trend line, right? Bounced off it here, tried to save it there, we lost it, deviated below it, and now have reclaimed, right? This is a pretty strong sign and does sort of give us, just looking at the chart, potential to open up a move, I think, back up to 60K, right? Is definitely on the cards while we stay above this trend line, right? Now, what I was just saying before is we could lose this trend line, obviously, again, bounce off 40K and then reclaim it. I think that would be a really strong sign. And I would be expecting to push towards range highs again. And then, who knows what happens up here? We might do something like this and just continue going sideways, right? The market was super oversold. And obviously we're needing a relief rally. So, there is another dangerous level, I think, here that we don't want to see a really bad rejection at. Which is basically 46K, right? That definitely is a level to watch out for, that we could get possible reversal off that. Now, the market has been definitely acting a lot differently in the last couple of months or last year, I should say. Basically, since we pushed and, a lot of corporations and more hedge funds starting getting involved back in here in basically from April, May 2021, right? The market has acted very differently. And we haven't really had that many pullbacks, right? Whereas previously, the market would sort of like chop sideways and, you would have much more, you'd have a lot better entries to get back in on if, you have a run and then pull back, right? Here, the market sort of just went straight down. We never really got a rally and retest. Like we never got this pullback up to here and then roll over type sort of setup. We got a small rally up here and then rolled over again, which wasn't really that much. We only got one real actual pullback, which actually took quite some time on the previous rally that we had to all-time highs from the 30K range lows. Right. So the same thing could happen again, right? It might just shut everybody out and not give you a chance to get in and push all the way back up to, 54K, come back, retest this trend line and then go again, right? That's definitely in the realm of possibility. Now, I'm drawing a lot of lines heading back up to, 60K and stuff like that, which definitely I think we can't rule out, but we have to be aware of everything that's going on in the stock market as well, right? And the economy, the Fed is set to raise rates in March, right? So we probably expect that to happen at the FOMC meeting, which I'm pretty sure I'll have to check the date, but is in the first or second week of the month, right? So usually on Wednesday. So that'll probably be the first raising rates. Now, is that already priced in? If we go and look at the S&P 500, possibly this pullback here was already pricing in. Basically, they started talking about they're going to raise rates in November, right? And that's when Bitcoin topped. And it took the stock market a lot longer to top, about 60 days, really. And then we had, that 10% pullback, right? come back and had a bearish retest of the trend support line, right? This is the level that Bitcoin is just broken back above. So we can watch as well to see if the stock market can reclaim that really important multi-touch trend line. But most likely what's going to happen now is this will go sideways probably until after we see how the market reacts to the raise in rates. If there's no real bad reaction when rates happen, which I think, it's been forecasted for so long, I think it's probably going to be fine. And there's not going to be a reaction because the markets already knows the rates are going to go up in March. So it's not going to be like, oh my God, shock horror, we have to sell everything because the Fed's raising interest rates. Like, everybody already expects it, right? So it's already baked into the price, which we saw in, this big sell-off and, in Bitcoin, we had this big sell-off, right? So this was the day here, November, it was this one here. It was November 10th when we hit the all-time high. And there was a big spurt on the inflation news that came out to be, 6.9%. And we've been going down ever since. Now, we had a really strong reversal since then. So maybe that is another sign that it's already cooked into the price of Bitcoin, interest rates raising. Just because interest rates are going up, by 25 basis points, it's not the end of the world. Like, it's going to collapse the economy. Possibly the market did overreact to it. Goldman Sachs saying 5 rate hikes over the year. So I think the more important thing to watch for is there going to be an increase in the amount of rate hikes? Because if there's anything that's a shock horror to the market, like they come out and they go, we're going to have to put the interest rates up, an entire percent instead of just 25 basis points, like that's going to be a shock to the market and there's going to be panic selling, right? Because they're raising it quicker than what the market is expecting. But if it's just, a normal 25 basis point rate, like it's probably going to be fine, right? And so I think there's possibly a little bit too much emphasis on the fear of interest rates going up. But what we need to watch for is how many times they're going to raise it. I'm pretty sure at the moment they're expecting 3 or 4. But if they come out and they say, well, we're going to have to raise it 6 times, we're going to have to raise, we're going to forecast it now and change their forecast, that could be another thing that shocks the market. So those are things to watch out for when we're looking at the FOMC meetings. But to be honest, to be fair to Jerome Powell and the rest of the Fed, they've been fairly transparent with what they've been planning, with monetary policy, right? So let's just see how it plays out. So what can we do, right? Because it's all good and well to say, let's just see how it plays out. But, we have to have specific levels on the chart to know when to get back out. So let's just say, we bought on this breakout and maybe we had a little accumulation through here as well. I managed to get some leverage positions on back here, but I took them off, when we got this red on the daily here, possible shooting star reversal, right? Because over the weekend, they didn't want to sit in this and give back all the profit on a BART, right? So I took those off. But, those trades are designed to be smaller swing trades, right? And I got that nice daily swing, so I got out of it, right? So maybe you got something here, right? Where do we want to be getting out of the market? I think losing 40K or this 40.6 level would be pretty bad for the market. We don't want to see us start to trade back below this, right? If we break 40K, I definitely want to be out of the market. So that for me would definitely be a deal breaker, right? The other thing as well, which I haven't covered off yet, is our buy condition 4, right? Which is the 12-20 EMA crossover. So this is a great crossover, especially for traders that sort of struggle to trade with, looking at the basic market structure of higher highs and higher lows, right? And especially when the market is a little bit weirder, that's behaving, we're not really having the nicer swings that we used to sort of get in the crypto markets where you'd have more definitive higher highs and higher lows, right? This decline was almost straight down, like it was very, very vertical. So the EMA crossover of the 12 and 21, so the 12 is the blue line and the 21 is the orange line, can help us with that decision-making process, right? So if we look back at the previous run of BTC, when the 12 is over the top of the 21, that's when we want to be looking for long entries, and that's when it's fine to have, say like our spot positions very heavily in the market, right? And then when we get the crossover to the downside, that's when we can start to, hedge, when we can start to take off risk on spot. And, with the blue line is solidly below the yellow line, that's when we want to be looking for short positions, right? So this is a very non-subjective way of telling you which way you should be trading the market. Because a lot of people have been messaging me recently being like, how do I know if I should be looking to buy dips or, sell tops, right? How come, bullish divergences on the low timeframes aren't working? Well, it's because we're in a downtrend now. Or how can I tell when I should be looking for those or not? So I wanted to introduce you guys to this little trick that can help just make that sort of decision, take it out of your judgment and be like, oh, well, is this the low? Are we making a new high yet? Or because that is obviously is subjective and takes a while to get good at reading that. Some people sort of, look at the 60-day market cycle that Bob Lucas talks about a lot, which can help as well to put in the lows and the highs. But if you want to learn more about that, go over to his Twitter. He talks about it all the time on his YouTube as well. It can be helpful. But I think this is just a really straightforward, clear-cut way of looking at the market where when the blue line is above the yellow line, you want to be looking for long positions. You want to have risk on. And when we break below, you want to be looking for short positions. You want to be risking off, right? And we can see that, this has worked very well over the course. So obviously we broke the upside through here and it stayed above all the way. We had a little bit of deviation below here, so you could start to manage the risk, right? But it didn't really end up trading below. We can see here the blue line never really traded below. So the 12 never really traded below the yellow 21 for very long, 1 second, right, or something, right? And then it was basically even and then back up, right? I stayed above all the way until we finally got the bearish crossover back here. And that was just before the sell-off, right? So sort of gave you a bit of warning that things were starting to get more bearish. And then we go into the downtrend, right? And now you see the blue line is below the yellow line, right? So 12 below the 21. And now we're looking for shorts all the way through here, right? And it didn't cross back up until back here, right? So you get back into the market on your spot positions here and you'd be looking for longs, right? Back below. So this is sort of like a no trade sort of area, looking for shorts, possibly a bit through here. And this was a sort of period where, it might go against you, right? So no strategy ever going to be perfect, but as you can see, this one, the 1221 is actually quite good. And then from back here, you'd be risk back on, right, until you'd be looking to get back out here, right? And now we're having a downtrend the whole way, right? You'd be looking for shorts all the way through here over the last couple of months. Now we're starting to get the EMA crossover back through here. It's crossing over at about 40K mark and price is currently 44, right? So what we sort of would expect from looking at this is, you would get a pullback into the bands at some point, right? So maybe that's going to come soon. That would be a nice entry and then push off from there. Now, an exit condition would be if we had that bearish crossover again, where the 21, where the 12 goes back below the 21, right? So back here would be that exit condition, right? So if this comes up like this and then crosses over and the blue line comes up like that, and then crosses back over, that would be telling us we need to get back out of the market and we'd be to risk off, right? So this is a little trick I think a lot of you guys that might have been struggling just looking at the market and just reading it, which is a lot of traders do. But it obviously is subjective and, sometimes you can trick yourself because you have a bias and not see the reality of it. So it's very hard to go against an EMA crossover like this because it either is above or below. You can't argue that, right? So it's non-subjective. And I think the more you can make your trading non-subjective and more systemized, the stronger your result's going to be because it takes less decision-making away from you and it bases it more just on the data, right? So that would be the exit condition. We're having the crossover bullish now, so that gives us the green light to look for long positions. And I love using something like this because it's going to stop you from trying to catch the knife all the time. And the great quote is most traders just the reason why they don't make money is because they get stop loss to death trying to buy the dip when it's in a downtrend, right? And they end up dying of a death by 1,000 cuts, right? So use this trick to stop, if you're the sort of trader that ends up, buying the dip when we're in a downtrend and you end up dying, your account is slowly dying a death of 1,000 cuts, maybe this trick will help you to get out of that, right? So that's pretty much it for this video, guys. I've been looking at this price action yesterday and today, and it's looking really strong. We're getting the crossover now, so that's giving me the green light. I would love to see this rally. It definitely can push all the way up to 60K. Bitcoin usually goes lower than you expect, and it usually goes a lot higher than we expect, right? So we're expecting this possibly to be the bottom and bounce off range low and come back for a retest of 60K. It didn't happen. We went way lower and pretty much straight down without a real rally or swing high. It was a very steep decline. If you compare that to previous Bitcoin declines, for sure, over a 3-month period, right? So now I definitely don't want to rule out 60K as a target, but, definitely looking at 52 here and being aware that 46 could be a top as well, right? So depending on how bearish the market is, obviously a lot is going to hinge on the stock market, right? So we need to keep our eyes on that and see how that goes. Obviously having a nice little push up today. If we can reclaim this orange trend line through here, that's going to be a great sign for risk assets and Bitcoin in general. If we come back up, reject that and roll back over, that'll be something we'll have to take into account. And looking at the Bitcoin chart as well, if we start to break down those certain key levels, be looking to take risk off. So those are the main things that I'm looking at the moment. And then the other main trade that we've been focusing on was posted about Rose about 100 times while it was in this buy zone through here, coming back to this multi-touch trend line. And I was saying if BTC can get a decent recovery here, Rose is in a perfect position for a move up. And while it's above this trend line here, I want to be risk on for this asset because we bought it when it was back down here, and that ended up being an amazing trade. If you managed to sell the top, which probably none of us got the exact top, but there was 140% in that move, and it gave a really nice daily exit shooting star reversal here as well, right? So that was a pretty easy one to get out of. Market was quite trash at that time, and we pulled all the way back to the trend line, right, and gave us another chance to re-enter on this one. So I'm hoping that Bitcoin continues its uptrend and Rose can come back up to maybe test at least 55 or something like that. But aware that there's possible resistance at this level here. So let's see how we go. And as we push, as usual with altcoins, I'll just start to take some capital off and move across back into Bitcoin or back into USD as we push higher. So that's the main altcoin I'm looking at the moment. I'm not getting too crazy with alts. I'm not buying big bags of Solana and, Radium and all these other shit coins out there, right? Doge and stuff like that, right? We're not getting exposure to those just yet. I don't think it's the right time. We need to see how Bitcoin reacts. It's been a really nice rally. It's had a 30% from the lows, 35% now, right? Definitely due for a little bit of a pullback. I'd love to see that pullback into 40K and then a push higher up to test 53, 54, right? That would be the really nice setup and give us sort of like a bit of that inverse head and shoulders type structure, right? So I'd love something like that for the retail traders to jump on. But, the market hasn't really been giving us stuff like that for a while now because the institutions are sort of taken over and they just make everyone panic sell as much as possible and then push it back up. And then when everyone starts buying like crazy, they start to sell down on it again. So definitely be aware that the market has changed. And I'll leave you with that, guys. So sometimes it's not the best to just sit on hands forever waiting for the perfect setup. And you just have to get into the market at some point, but have clear levels that if it gets violated, right, and it breaks down, right, or, the EMA crossover or something like that, right, to the downside, then you want to be exiting positions again. Okay, guys, thanks a lot for tuning in, and we'll see you all in the next episode.